South Africa has made many changes to its economic system over the past 2 decades. In the 80s to the mid-90s, the economy was based more on a command system. The political climate has changed. It's currently a mixed economy. There's still major industries like oil controlled by the government. South Africa is one of the largest and strongest economies in Africa today. Gold has become the highest exported material, followed by diamonds. The rest of the exports, platinum, coal, and iron, have overtaken the previous agricultural exports. Imports have also increased, but currently there's a $3 billion trade deficit. The majority of the imports into South Africa are crude and refined petroleum. One of the major changes over the past 30 to 40 years has been the trade between South Africa and developing countries like China, India, and Japan. These developing Asian countries account for the majority of import-export trade with South Africa today. In the 1965, Europe and U.S. were the leading traders. Economic growth, measured by annual GDP, has shown very little progress over the past 2 to 3 years. In the early 2000s, South Africa was seeing large growth in the area of 5% in 2005, but took a huge drop during the economic crisis of 2008. There has been a rebound over the past couple of years. Growth has slowed due to global downturn. GDP growth was only 1.26% in 2015. GDP total in South Africa is only $314 billion versus $18 trillion in the U.S. As the growth graph for the GNI per capita PPP shows, there has been a steady disparity between South Africa and U.S. over the past 25 years. The data shows that South Africa has become more expensive compared to the U.S., and PP factor is around 5.5. The Human Developmental Index is an important criteria for economic development. A score of 1 shows high economic development. South Africa, however, has a score of 0.66 versus the U.S. with 0.915. There are many factors that make up the score. As we can see from the table, South Africa falls short compared to U.S. on many aspects, including life expectancy with over a 20-year difference. One of the reasons for the low expectancy is high homicide rate and crime rate in South Africa. One of the negative signs of economic growth for South Africa is the high unemployment rate, which is over 25.1%. How has this affected foreign investment in South Africa, as well as investment out of the country? If we look at net outflow of FDI, we see that over the past 4 to 5 years, there's been a significant movement of money and investment out of the country. It appears similar to outflow in the United States. Many companies are looking outside South Africa due to government instability. Net inflow of FDI into South Africa has significantly slowed in the past 2 years. There was a nice investment into the country from 2007 to 2013, but has seen a sharp decrease in 2015. Once again, many point to political instability as a key factor.
South Africa recently avoided a downgrade to so-called junk status by the ratings agency Standard & Poor's, which cited its slow economic growth as a major area of concern. Most feel the economy has bottomed out, but the recovery will be slow.
Business confidence surveys are telling us that the majority of survey respondents, in other words, firms in South Africa, are not confident. And when you drill down into what their main bugbears are, the biggest constraint to business, we are told, is the untidiness of our domestic political arrangements.
With the